You're watching today's video technical update presented by FX Times. It is Monday, June 21st, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. Coming out of this weekend's announcement from China to unpeg the yuan, also known as the RMB, to the US dollar, equities rallied globally. Allowing the Chinese currency to float more freely was good for some risk appetite. We saw gaps in some dollar crosses, but the market is being cautious. Let's take a look at the euro dollar, Aussie dollar, US dollar, Canadian dollar pair, pound yen, and euro pound pairs. This video is being produced at about 4:30 p.m. Eastern Time near the end of the US session. Here's a look at the euro dollar 4-hour time frame. We started the week with a rally, but the market soon closed that gap. Very strong bearish candle. Strong move here. And we look at the daily time frame actually. What we see is an engulfing pattern, and here we still have a negative reversal. So this swing projection is still valid to 1.17 area. Okay, so 4-hour time frame shows that we may be starting that move towards the 1.17 area, but we do have this rising support as and we may also have this faster support, which is broken now. So now we're gonna see if this second speed line can be broken. In any case, this price action itself is showing that this is an early sign, although it's not completely confirmed yet, but it's still very strong early sign that the market will reverse and head back down towards 117. Here's the 1-hour time frame, and we see that the RSI here finally broke below 40, indicating either that the rally for the last 2 weeks is over, or there's going to be a major scale back of the rally in the next 2 weeks for another rally after that. In any case, there should be some stronger decline to follow this. Whether it is the swing towards 117 is unclear until we get like a pullback after that. If the pullback is strong, then we are still in correction mode, and the bearish outlook again needs to be put to the side. Okay, so that's the euro dollar pair. Moving on to the Aussie US dollar pair, we have seen this rally for a couple of weeks now, and looking at the count, you see here we most likely had our third wave because it was the most dynamic attempt, the sharpest attempt. And then we have sideways correction, consolidation here, which is different from any of these one swing declines. So this may be wave 4, which means we may be in a terminal wave of this wave C, suggesting that a topping action here should follow some further decline. So Aussie dollar is at that level, and you see here it's near the 61.8% retracement level. So if the market closes this gap, it may and break below this trend line, it may start reversing back to the bearish mode. And you can see that in the daily time frame, you see this decline here had a very sharp reversal here, ABC, but we may have another bearish attempt after this correction. Here in the daily, you see that that the RSI is approaching 60, and for the bearish outlook to continue, we would need to see the RSI stay below 60, and if it goes beyond, it has to be very insignificant. Okay, so that's the Aussie dollar maybe turning bearish, even though we started the week kind of shooting up. So I would stalk this topping action to see if the market can break below this trend line. It will break this trend line even if the market goes sideways, and then if it comes down and fills the gap, then this reversal outlook is in play. Here's a 4-hour look at the US dollar Canadian dollar pair. We saw the Canadian dollar come out of the week stronger against the US dollar, but this gap has been filled in the US session. So now we may however, we see this RSI maybe developing a negative reversal, so I'm not sure if this Canadian dollar strength is over yet. There might be another little attempt. Not sure. After all this bottoming action, another attempt. If it breaks below this 30 area, more significant than this break, then we may have further slide in the US dollar Canadian dollar pair, which means further Canadian dollar strength. But let's take a look at daily. We are at an important support zone, and we did have already equality of this first swing projected here to the second swing. And here the RSI is right above 40. If the market is bullish, then it should be turning up here. So, and then finally we see the daily candle, maybe a piercing pattern, which may be the beginning of a bottoming formation. Okay, so I would keep stalking this pair for bottoming action, and if it does reverse, a target is to this 1.0925 area, although now it may be a little lower to about 1.09 because of the fresh low from this slide. So the US dollar Canadian dollar, continue to stalk this possible bottoming action. Continuing the theme of the last couple of weeks, the pound yen has been just twisting and turning. What I mean by that is it creates new highs and then it may start to create a new low, but still create another new high. So it's there's no trending, there's no strong trend at the moment. The market can be categorized as very indecisive in this more, not just the candlestick indecision, but just market action throughout the last couple of weeks, very indecisive. But we may be nearing a top here as the market became flat relative to this here. So, and today's candlestick here is very strong in the start of the U.S. session, or actually after the U.S. session got underway. Here the RSI stays below 60. That's a good sign for a bearish outlook. There may be even a little bit of a bearish divergence. It's not as strong, but we basically have the same high here and a lower high here, so that's a bearish divergence. We need to see the market break below some kind of rising support, right here. The market is attempting that. Maybe a break below this area, about the 133.50 area, should give you, good confidence for the outlook, bearish outlook. Which now I'm going to switch to the daily. This is the bearish outlook. Now see the market here came up 1, 2. Seems like it's creating a triangle. Initially I had projected this Gartley, but the candlestick action is very stubborn, and but it's not, this scenario has not been invalid yet. Until we break this trend line, then this becomes less likely, and the more likely scenario becomes that we have completed this correction and a reversal reversal, but really a continuation of this bearish attempt. So that would point towards the 123 area. So pound yen, if it breaks below this rising trend line, may go to 123 in the intermediate term, a couple weeks, 3 weeks, but at the moment it's still not. It's still too early to say. So this bearish outlook is a little premature, but looking at 4-hour time frame, we do have some initial signals with the break of a trend line, and just if the RSI here breaks below 40, that would be a strong signal too. Okay, so that's the pound yen with the bearish bias, although we need to continue stalking this topping action. Here's a look at the euro pound pair. Here's the 4-hour look, which we discussed on Friday's weekly update. Here we may have had A, B, and then a more complicated C wave. So this may, this triangle, we may have another rally before finishing, but that could be very limited. in any case, this negative reversal, unless the market breaks above this level here, you see, it's just at that level. So it with that, a suggested projection is to the previous low here, which is about 0.8215. So if the market breaks below this trend line, it may go to 0.8215. Here's the daily. We see that the market has been in a long decline here since October of last year, and we may have some be on a wave 3 actually coming out of this channel. So there may be some sharp declines if the market does reverse back down. Okay, so that's the euro pound in daily time frame. That wraps it up for today. Check out fxtimes.com for more analysis updates and educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.